Hey, agents. Today we're exploring an advanced strategy for NSS Life Single Premium Whole Life, thanks to a recent tax break for seniors. This strategy covers viability, mechanics, advantages, and risks. It's for seniors with specific income levels, below $75,000 for single filers or $150,000 for married couples. This strategy uses a temporary tax deduction to fund a tax free asset. Let's break down the process. First, the client, a person 65 or older with money in a taxable retirement account, aiming for a tax free legacy while maintaining liquidity. Next, the tax law changes. Recent 2025 tax law changes provide a temporary bonus deduction of $6,000 per person or $12,000 for joint filers from 2025 through 2028. This bonus deduction creates a deduction stack, layering on top of existing deductions, creating a new 0% tax bracket. Your client can take a withdrawal from their IRA. The client uses the new $6,000 deduction and other standard deductions to offset the income tax on that withdrawal, making it effectively tax free. Finally, the purchase. Your client uses the net proceeds to pay a one time premium for an NSS Life single premium life insurance policy. NSS can also stretch this payment over 3 years. The result? Money moved from a tax deferred account to a tax free vehicle, the life insurance death benefit, without high tax cost. Let's look at the pros. The $6,000 bonus deduction creates a tax sale during a 4 year window from 2025 to 2028, allowing seniors to move money at a 0% or very low tax rate. It leverages a tax free legacy. An IRA left to a non spouse beneficiary is 100% taxable, but a life insurance death benefit is 100% income tax free, creating a larger, more efficient inheritance. This strategy also solves the RMD problem. Withdrawing funds now lowers their IRA balance, reducing future taxable required minimum distributions. Finally, it maximizes deductions. The new deduction is available even with the standard deduction. An IRA withdrawal can fill up that deduction space for free, preventing it from being wasted. Now, the cons. The biggest risk is the income phase out. The $6,000 bonus deduction phases out at a modified adjusted gross income of $75,000 for single filers or $150,000 for joint filers. A large IRA withdrawal adds to your modified adjusted gross income, potentially pushing the client over the limit and causing them to lose the deduction. This generally makes this strategy non viable for moderate to high income individuals in most cases and with other carriers, however, not with NSS Life. For senior taxpayers who are too close to the maximum modified adjusted gross income and do not want the tax benefit phased out due to a large IRA withdrawal, NSS Life has a very unique solution, which we will discuss in our example. Another risk is insurability. The plan is unworkable if the client cannot get life insurance. A 65-year-old must be healthy enough for a single premium policy at a sensible cost. Note, NSS Life's single premium whole life offers liquidity, meaning the cash value can still serve as an emergency fund. So, who is this strategy viable for? The ideal candidate is age 65 or older, in good health, and has a taxable income that is below the phase out limits. Unlike other single premium whole life providers, NSS Life's plan will work well with people who have higher income. They should have other assets for retirement, not need all of their IRA money for living expenses, and a primary goal of leaving a larger, tax free inheritance while maintaining liquidity. For this specific person, the 2025 to 2028 window presents a unique opportunity to use the recent and temporary tax bonus deduction and NSS life strategy to transform a taxable IRA into a tax free legacy. Consider Mary, age 68. Her modified adjusted gross income is $45,000, and her IRA is worth $100,000. Mary wants to leave more tax free assets to her kids and is in good health. By taking $30,000 from her IRA and placing it into an NSS single premium whole life policy, she secures a $52,864 tax free death benefit. She effectively increases her children's inheritance by $22,864 in immediate cash and converts $52,864 into a 100% income tax-free asset, all without additional current income taxes. But what if Mary had a modified adjusted gross income of $65,000? With most other companies, she would only be able to secure whatever $10,000 could purchase to avoid phasing out her deduction. But not with NSS Life. NSS would still give Mary the $52,864 policy with a $10,000 deposit and a promise to pay the balance over the next 2 years, thus maximizing the deduction while the opportunity window is open. Yes, NSS Life will fund the full single premium whole life on day one and allow the insured to draw out three equal payments from their IRA to maximize their tax break. This is the best of both worlds. This 3-pay can be viewed as your client's deduction maximization strategy if they have slightly higher incomes. NSS Life has almost $2 billion in assets and has offered whole life insurance for over 135 years. This single premium whole life plan builds cash and loan values for future needs and is eligible for dividends, which add to the policy's values. As discussed earlier, NSS Life also offers a 3-pay life plan, identical death benefit, but with 3 equal annual payments. Lastly, unlike other single premium whole life contracts, the NSS policy is highly liquid from day one. To learn more about how this advanced financial strategy can benefit your clients or your own legacy, contact your NSS Life agent today. Don't miss this unique opportunity.